Hello guys, this is the pre-market analysis of 19th of May. So we have some positives today. Yesterday when I have done with the pre-market analysis, it was completely negative because of things which are going around. Now, if you see oil price is also slightly cooling off, Trump is delaying the military strike on Iran. And yesterday I've told you the Russian oil waiver that has expired, right? The sanction. And now that have, got the extension also, and that's very important for India, and because of that itself crude oil prices slightly cooling off. So these are positive, and most importantly, fresh FII buying for the last three consecutive session, and that's adding a big positive for when it comes to our market. And because of this, yesterday we have seen afternoon a massive short covering, and that covered all the gap down and the further losses of almost 350 points in Nifty. And at one point it filled the gap and even went higher also. And Sensex, we have seen 1,000 point down and 1,000 point recovery, a 2,000 point move in one single day. So the present situation is that the market sentiment have slightly improved, but still there are things that we need to watch out for. Oil remains above 100, and rupee is at fresh all-time low. Yesterday it made a new low. And if you see in the last month itself, I think rupee have fallen almost 2%. FIIs, if you see their derivative positioning, it's still heavily short. So I'll be discussing all these. And, bias for today, there is nothing, right? It could be a straddle play, especially it's an expiry. So I'm looking for a sideways market. And if we see yesterday's high and yesterday's low, that range is breaking, then we may get some short covering rally and the gamma spike. Otherwise, the market will trade comfortably in yesterday's range. So you can see a small spike on the wick on the upside, and from the lower side also you'll see a bigger shadow. So there could be a good support at 23,300 and 23,600, 23,800. So this 500 point range is what we will be looking at. Most importantly, you have this Russian oil, this sanction on Russian oil, that waiver which was given, that has been extended, and that's a big relief for India. So, it was about to expire yesterday, and I discussed that in the pre-market yesterday, and that is one of the reason why the oil price was rising. But now, and because of that itself, that slightly created panic in the oil market, and especially for countries like India and China, because both are major buyers of Russian oil. Now, the latest update, if you see, Russian oil waiver is for another 30 days, which is giving some relief for the oil and, of course, for the market also. Now, if you see the purpose of this extension, it is basically to help because of this Iran war, which is going on, uncertainty is there. So it is basically to help that energy vulnerable countries, especially countries like India, which strongly rely on the import for oils, and the countries which are unable to fully access the Gulf oil supply. Because you see, Strait of Hormuz disruption is there, US-Iran conflict is going on. So it is directly referring to India and China actually. So the waiver is going to mostly benefit. In fact, it is going to benefit for Russia, India and China, and this is given to these two countries. So it's not a full sanction removal. This is just a relief, right? It's a extension which is given. Sanction is there, but there is a relief given on sanction for another 30 days, right? So, and also this is applicable only for those Russian oil which is already inside the tankers and not the newly pumped crude oil. So, this is kind of temporary stabilization measure only, and it's not a long-term solution. But because of that itself, oil price have slightly cooled off. And if you look at Brent crude, yesterday we have seen it's around 112, and now it is around 109, which is good. And WTI is around 102, which is both are above the psychological level of 100, but still compared to yesterday's negativity, it is good. Okay. So it's oil is still elevated. Anything above 100 is very negative for the market. But still, if you look at compared to yesterday, it is much better. And that is what I mean by a slight relief is there. Now, coming to Iran US negotiation. See, this is going on. Iran is sending a proposal to Pakistan. Pakistan is mediating. Pakistan is sending to US. And what is that proposal? Every time it is the same, that war-related damages need to be compensated, full control over Strait of Hormuz, etc. What US will do, US will outrightly reject it, and then again this threat and aggression and escalation tone will come, and then again news will come that Iran is sending another proposal, so the market goes up, then US reject it, market comes down. So this has been the scenario, but every time market is reacting to it. Normally we see one time only market used to react for these kinds of news, but now you see again and again, because market love peace, right? Maybe because of that, whenever this headline is coming, you see massive short covering rally also. So yesterday, this proposal again got rejected, and White House have told that it is not meaningful, right? And both side demand is also, in fact, unacceptable. And what US said is insufficient for a breakthrough deal. So as of now, the disagreement is continuing. So there is no, meaningful end which is going to happen, and it is not going to happen because the demand from both sides, if you look at it, it's that itself is not meaningful, and that is not acceptable for both the parties. So it's not going to happen. And the positive trigger, if you see, for today and yesterday's short covering, Trump basically delaying the military strike, which he was threatening on Iran. It delayed so for another 30 days. And the reason is a request of Qatar, Saudi Arabia, and UAE. The statement of Trump was like, serious negotiation is taking place. Gulf countries is also believing that the deal is still possible. But he also said the final deal should include no nuclear weapon for Iran, right? And let's see what is actually going to happen. So this will be there for quite some time because Iran is not going to step back from its demand of complete control over Strait of Hormuz. And of course, Iran is not going to stop asking for war-related damage, and definitely, which is impossible from US side to do that. If they do that, then that itself is questioning the very existence of Mr. Trump. So, and also we have seen last day weekend Iran attacked UAE nuclear infrastructure, and that situation is now cooling off slightly. Situation is still unstable, but immediate warfare slightly reduced. Right now, if you look at US market also have some other things that we need to look at: the high bond yields, which I have discussed yesterday, high oil prices. So US market, if you see, traded negative for majority of the session. Even if you see during our market hours in the morning, Dow was 400 point negative, but it recovered later. And US market when opened also, it was slightly negative, and market mostly recovered the losses, and Dow Jones have closed flat, almost slightly positive. S&P is slightly negative, which is around 0.07. Nasdaq is the weakest performer because Nasdaq was even day before yesterday. Nasdaq was positive, so Nasdaq is zero point 0.5 negative. And the main reason is the bond yields, right? When you have a safe investment and which is giving more yield and more return, so normally investors tend to go to that area when uncertainty is there when it comes to stock market. Okay. So VIX is also, yesterday we have seen 7% up when uncertainty was there. Now slightly below 18 now, and VIX is 3% down, which is again a positive sign. So if you look at it, Gift Nifty is also indicating a mild positive signal. We may get a flat to 50-point gap up opening. So say I don't have any particular bias for today. Unlike yesterday, we have so many negatives and we have a clear bias that I'm going to sell on rise. Now today there is no particular bias because we already what I've discussed, the positives, we already factored in and we already priced in with the positive rally which we have seen yesterday. And what is going to happen at this level, no one can predict, and we need to see. This is especially an expiry. So if I am a buyer, it is very difficult. Only after seeing the price action that we can decide. And if you would like to learn these in the live market, we have the live market mentoring session where we see things in the live market and where we trade and where we teach also, even for selling as well. Now, for selling, it is going to be easy. I'm expecting it's going to be a straddle day. So 23,300 to 23,800 could be the range. 23,500, 23,600, 23,700 straddles are there. Just need to keep moving the delta is all what you need to do today. Nothing much. I'm not expecting big move neither on the upside nor on the downside. Maybe towards the end afternoon session, you may get some expiry related adjustment moves. Otherwise, chances of big moves are very less. Now, if you look at ADRs also, IT is looking strong, but banks are slightly weak. ICICI ADR were slightly negative, but Infosys, if you see more than 4% up, value buying is happening because Infosys and all are at a fresh low level, and Wipro ADR is around 3%, right? So the reason for IT strength could be See, it could be because of weak rupee. When rupee is weak, what happens is export related sectors will get that advantage because you earn in dollar, and when it comes to rupee you get more profit. So that could be one of the reason, and mostly IT will get that advantage when rupee is weakening. So IT is looking slightly positive. Bank flat to negative bias. Bank can drag, IT can look good today. So let's see what is actually going to happen. Another issue is that rupee is at all-time low, 96.39, and it closed at around 96.34. So in the last 1 week itself, rupee have fallen almost 2%, which is not at all good. It is positive for export related stocks. That's why I told you IT is doing good. Why export related stocks? Because you earn in dollar. So earlier you earned $1, you get, let's say, 90 rupee. Now you earn the very same $1, but you get 96, which in itself was a 5%, 6%, 7% increase in your profit margin, right? Because the cost, expenditure, and everything remain the same, you get more rupee, right? So that because of this itself, there are issues for our market. As long as rupee is weakening, our forex will be under pressure. FIIs are not comfortable, and inflation pressure also will be there. And because of that itself, RBI's possibility of rate cut won't be there. The chances of rate hike will be there if there is inflation. And also this war is again adding uncertainty. That fuel prices also in our petrol bunks also prices started increasing, right? So definitely inflation will be there, and that will again add pressure on RBI to increase the rate further. So that can increase the rate, inflation, and if this also adding to inflation, that's not looking good. Now, one major positive trigger is this Trump administration completely dismissed all the criminal and fraud charges against Adani. So Adani will be in focus, and it can rally today. And Adani may invest 10 billion in US. That could be the arrangement or the agreement, right? So it is positive for Adani stocks. Let's see how Adani stocks will do today. It's going to be very interesting. And yeah, institutional data. Third straight session, FIIs were buying. Yesterday also they bought for 2,800 crore. So, you know, uh, it looks good because three sessions. Earlier, we have seen sometimes one session they buy, but rest of the sessions they sell aggressively. But three sessions they bought. DIA is also bought for 2,700 crore, and that's a strong institutional support. Both were buying, and that's why Nifty recovered all the losses and moved higher. But if you look at derivative positioning, FIIs are still in the short position. See, normally what normally happens is if I want to sell in equity, first I short in futures, right? And then I go and sell in the equity. So if you look at FIA's position in futures, it's 87% short. So I don't know what drama is going to happen. Maybe expiry also. So be very careful with that. Whatever they bought on the last 3 days can be sold today also because they are still heavily short on futures. So if they want to sell in equity, first what I do is I short in futures and then I offload. Okay. So as usual, otherwise clients are 71% long, retailers, prop traders are 64% long, FIIs are 87% short. So cash market, if you see, they have bought yesterday, but in futures they are shorting. Maybe it can be for sector rotation also. They were holding something that they are shorting in futures, and they may sell that and they are buying something else as well. It could be sector rotation as well because the IT stocks, if you see, it's a fresh low, right? Wipro, Infosys, TCS, etc. So it could be a very good value buying also that they might be doing. You don't know. Now, if you look at options market, calls added 3.6%, puts 25%. So put call ratio have improved significantly. It's now at 1.17, which is very strong bullish bias. Prop traders have covered their bearish position and slightly now looking bullish. That's the participant positioning changes. Retail traders have reduced the bullishness. If you see from yesterday, it was 16% to 12.3%. Still, FIAs are bearish. So FIA is still positioned bearish if you look at the derivatives, but cash market, they are buying. Technicals I have discussed yesterday. Support resistance level I have discussed yesterday. Right, major resistance now is at 23,800 and 24,000. Support 23,200, 23,300 level. So 23,200 to 23,800 is the range, slightly bigger range because yesterday's candle, if you see, that's a big candle, 350 point down move, 400 point up move. So that range we need to take, right? Yesterday, if they can make that range, today we need to keep that range. So to be on a safer side, 500 point range is what I'm looking for. And if you look at Bank Nifty, the support is around 53,000, 53,200, 53,000 range. 53,900, 54,000 range will be the resistance level. Now, call OI maximum is at 24,000, but I consider 23,800 as the maximum. That's the strong resistance for today. And put OI, if you see, 23,000 is the maximum. So the bigger range is 23 to 24,000 that I would be looking for the monthly expiry. But today's expiry, 23,200 to 23,800 is the range that I'm looking at. So if you have selling positions, straddles at 23,500, 600, and 400, you just keep shifting delta. If you have 40, 60, 50 deltas, just keep shifting delta and get the time decay. Otherwise, every 100 point move, just keep shifting delta. The one which moved from 40 to 30, make it to 40, of course, and the one which is moving from 60 to 70, make it to 60. So the one which moved to 70, exit that. The one which moved to 30, exit that, and then add new 40 and add new 60. That's all what you need to do. Okay, rest of them, you keep it as such because 50 will definitely move to 60, so you don't want to do anything. 40 will move to 50 also, right? And 140 will move to 30, the other 50 will move to 40. So these adjustments anyway, not a big deal, only one you need to adjust. So slightly the sentiment is improving. The positives are Trump is delaying military action, Russian oil waiver extension, FIA is buying 3 days continuously. But again, be cautious. They are very short, very much short on futures. IT sector is showing strength, which is good, but still oil is cooling off, which is good, but still oil is above 100, which is not good. Rupee at fresh all-time low, which is adding inflation pressure, which is again putting pressure on FIIs, which is not good. FIIs still short on derivatives, which is not good. Iran negotiation is still going on. It is unresolved. It is also not looking good. So the final takeaway is market is entering a short-term consolidation stabilization phase, and it is very difficult that we can take any direction. So I cannot at this point of time tell you sell on rise or buy on dip also. So looking at intraday, you will get a lot of opportunities. Looking at the price action, take that decision and trade carefully. See you.